So in today's session, I'm going to be covering with you today, and that is the stock market, metals and miners, and the bond market. I'm going to be looking at the major cycles and where we are in the overall cycle. Not short-term analysis, but the overall cycles and what's likely to come from there. Also, I'm going to talk to you about the 40-year shift that's taken place. I'm also going to talk to you about what's going on right now in the short-term analysis on the stock market and the metals as well too. What's going on right now from there. Also, I'm going to talk to you about why gold could have put in a major top for at least 1 year, maybe even longer. I'm going to talk to you about the 100-year stock market cycles and where there's some major buying points coming up real soon. I'm also going to talk to you about one market set to break out and it's likely to be starting a 1 to 2 year bull market, and no one actually sees this coming. I'm going to show you the pattern. I'm going to show you exactly why this is going on right now. And then also, very last but least, I'm going to share with you my best pick going into 2026. If there was one market, one pick, that not only is it my pick, but I've already invested in this for 2026. I'm going to share with you exactly what that pick is in today's session for me. So let's get straight into it. Let's actually start off with the good old market cycle here. So the first thing I want to talk to you about here is where I see things go in a big market cycle. And the best way to do this is, let's see if I can bring this up for you guys from here. This right here, right? So this is the screenshot right here. So the one thing I'm always looking at myself is I'm always looking at the CK. One thing that we see time and time again is the extremes of where markets are at, right? So we know that obviously in the last couple of months, apart from the last couple of weeks, not so much now, but the last couple of months, we do know the metals, the miners were like very, very noisy, right? There was a lot of it cannot go down and so on and so forth. So therefore, what we're seeing right now is if I'm just trying to put the perspective of where we're at right now, in say, for example, everything from there. So gold and silver, I believe we actually hit the euphoria phase, in that there. The drop that we saw, I believe, is likely to be here. And so I believe we'll actually likely get a bit of a bounce. I'll share that with you in a minute when we get to the charts. But I believe we're actually at this level here right now. We're likely to get a bit of a bounce, but I believe we're going to be in this complacency level, which goes into the point of where I see gold right now. So I do believe like the euphoria that we saw at that basically about a month ago is probably likely to be ending right now, when it comes to metals. Now, when it comes to the stock market, I look at the stock market and I try to put things in the context of where are we at really? Like, where are we really at? And if I bring this up to here, and if I look at, this is the actual fear and greed index right now. The one thing that I'm always looking at here, if I go to this chart here, and I just below, and I look at the actual, say for example, the S&P 500, okay? We look at the S&P 500, and let me just bring up, say for example, this one right here. So I'm looking at the context of where we are in the big cycle of things, right? The big cycle of things, what's going on. So we can see that through there. If I bring up the weekly daily from here, and let me bring this up to here. Let me just bring up the S&P 500. So here's the thing. It doesn't make sense to me to see where we are right now. This S&P 500 is where? At all-time new high. At all-time, basically all-time new highs. It's just holding here. Very strong trend, and I'll get to that when it comes to the short-term technical analysis part of this video. But when I'm trying to get the picture of, okay, where are we here right now? Okay, well, I'm seeing that still there's actually a lot of fear around this rally. It doesn't make sense to me, which I believe we have a lot more upside to come, to see we're basically at all-time new highs, but the fear and greed index is still at fear. That's whenever we get this level here, in the past, whenever we've gotten these levels down here, these levels here have been major buying points in the markets. Especially this whole thing here was the tariff at the start of the year. Right, that was the tariff crash at the start of the year, around February, and then obviously we had the big bounce, and now we're coming down through here. So it doesn't mean we can't get a bit of a pullback, but even if we do get like a little bit of a short-term drop out of the markets, and we come down to here, like it says to me. So looking at this level here, when it comes to the overall major part of where we're at right now on a cycle basis, then I would have to say that, there's possibly disbelief here. Even though we've had such an enormous rally to the upside, there's still a lot of disbelief around this market here. Like I'm not I'm seeing more bullishness around, the metals and the crypto market instead of the stock market. So maybe hope. I'm just trying to see where we're at right now in the overall cycle of things, and I'm not getting a lot of euphoria around the markets yet. Like even though the market's made all those all-time new highs, I'm just not seeing. And leave a comment in the section below. Let me know what you think. But I'm just not seeing. I'm not hearing the same noises as I was about a month ago or the last couple of months when it comes to the metals, right? Especially gold, right? You guys probably know what I'm talking about. The gold was really loud, really, really loud, right? Central banks are buying. It cannot go down, and all this sort of stuff. But I'm not hearing that noise around the stock market. So even though if I bring up the actual stock market chart here, and I show you this here, even though if I look at the actual market analysis, and this is the S&P 500 here, even though we're seeing this, that tells me that, yeah, we can still get a little bit of a pullback here, right? A little bit of a pullback. But man, we probably still have a really, really, really big move to come, because I'm not hearing or sensing when it comes to market sentiment anyway, of where we are at right now from here. Right, so that's what I'm seeing there, guys. When it comes to gold, I see gold brought more complacency because it's just so noisy. But the one market that is down the bottom here that most people hate, and that is the bond. That is bond market. That is the the TLT and the TMF market. So if I go back to here, and I bring on say TMF, this is the TMF chart here, right? And I bring on the weekly chart. So the one market that's a lot of people that I see that could be down the bottom here. Now, the markets that are down the bottom here, they tend to take a bit of time to really start to kick in. So one thing I'm seeing is that this market down the bottom here is the TMF. And if I bring on the TLT market, okay, so this is the TLT market here. We're seeing that there's you can see there's been a lot of hate and a lot of like anger and disbelief and all sort of stuff. And it's just interesting to see. So when it comes to all these market cycles, just to recap there, gold, I believe we could be getting a rally soon out of gold, but this is more at the complacency stage. And again, the actual stock market, again, like I'm not even getting optimism out of the stock market. it's like, and if you think about this here, right, like this is where like a lot of traders who don't understand the sentiment of this thing, they think, I saw this so much when it comes to, gold, right? So many people were thinking that, so many people are bullish gold. It's only going to go up here. It has to go up. You know what I mean? And this is where most amateurs don't understand the markets, because as you know, right? Like you saw with gold, for example, right? Gold, oh my goodness, gold, keep going up. And suddenly, bam, what happens? Real quickly, it smacks you in the face real hard. And those who are not ready for it, then they go down that path there, right? So that's what I'm seeing from there, from that perspective there. Let's actually go back to what we're seeing here right now. And let's go to the next one here, the 40-year shift that's actually taken place. So the 40-year shift that's actually taken place that I don't believe most people are seeing right now is this. If I go look at the interest rates here, this is the actual chart here. But if I go look at the interest rates, and I bring up, say, the 10-year as an example. If you look at the 10-year's been here. Now, I honestly believe charts really give us a real good, clear picture on what's happening right now, and they're the best tool to use to trade. You can't trade on fundamentals, you trade on patterns. But if I'm looking at the big picture here, look at this here. Over the last 40 years, we have continued being in a cycle. See this major cycle that's been taking place here? And now look what's happened. We've continued, the market has been continuing to be in this downward phase through here. And now look what's happened. Now we've broken out of this. There's been a massive cycle shift that's taken place right now when it comes to just the way that we've seen things when it comes to interest rates. So while interest rates, I believe, are going to come down here, I don't believe we're going to come back down here. I believe we've actually found the major bottom here, and we're no longer going to go back into what should I say is what we've actually started to see now for the last 5 years is a complete shift that's actually taken place, and it's different to what we've actually seen for all this time here. So you can see even through the 80s in through to here, right? There's been a major shift that's actually taken place. So even though we may get a drop down here, which I believe we're going to, a bit of a drop down the bottom here, I believe the drop's going to then suddenly, and we're going to start to see there. So I believe we're actually going to see a lot higher rates, especially what I see happening towards the end of this decade. I see a lot more higher rates from there to there. So that's where definitely owning bonds would be very, very risky looking into the 2027, 2028 period from there. And that's that big sort of shift that's actually taken place from there. Let's actually look into some short-term analysis for the stock market and the metals, and we can go from there. So if I let me bring on this chart here. So let's look at the stock market. So stock market here, guys, from short-term analysis perspective, we can actually see that the major two things I'm always looking at is what's the trend and where's the momentum, meaning the moving averages. And as you can see, right, this is where like a lot of traders continue to get in trouble, is that the one thing I've learned is that as long as the market keeps making these higher lows, we're going to stay in higher lows is an upward trend. So we have this low point through here, and you see how we've just made these basically higher lows all the way up. And then what I like to do is, like I said, that's higher lows. And then if we have this, see this blue moving average especially, that's what's called my 52 moving average. If that's trending up and we're getting higher lows, which generally goes hand in hand anyway, right? We have strong trend, meaning higher lows, and the moving average is like a momentum indicator. So we have moving average through here. So as you can see, and every time we've had these pausing, even a pause, a drop, a drop, a drop here. So what I'm seeing right now is that, yeah, we may is the word, get a little bit of a correction here. But then I just see a lot higher prices based off what we've walked through in this video so far about how we're likely to see so much more upside at this level here, because people are so fearful. Look where the stock market is right now. That doesn't normally go hand in hand. So there's a lot of fuel behind this before we actually see, and that's why I see there's probably likely to be a really, really, really strong rally coming out of these markets. That's the NASDAQ from there. This is the Dow Jones as well too. Dow Jones, same sort of thing here. Look at this here. And this is where you always want to be trading with the trend. And every time we get a drop here, as long as it makes these higher lows, see these higher lows? So low, higher low, higher low, and higher low. And then we have the moving average coming up. Look at that there, moving average coming up. And so I'm always trading with the trend, higher lows, and with the moving average. Because what you'll find is that if the moving average is trending to the upside like it is here, then what you'll find is that every single drop is generally just a pullback and then a trend continuation. Up, pullback, continuation, up, pullback. And as you can see here, look at this here. Every time, especially this is why I personally love trading. I love using the 52 moving average with my personal trading. Because when the market pulls back to the moving average, if the moving average is strong, more times than not, the moving average will hold it, and then it'll continue that trend. Come back down, hold it, and continue the trend from there. As you can see from that point from there to there. So look at the Russell as well too. Now, looking at the Russell is in a bit of a different sort of territory right now. And that is because we've actually had this big move up. We're actually holding at this level from here, as you can see. So that's that major level from here. King Russell, baby. For you guys that are around last year, King Russell is actually still in play. Here we go, King Russell. For you guys that are new to my YouTube channel, last year, was it last year? Yeah, last year, all through 2024, I was like, King Russell, baby. And I actually really thought King Russell was going to break out. I did trade King Russell. I did trade this Russell here. I made 85% return on my options because I had an option trade through 2024. I really thought we're going to break out, but we didn't. We had a drop, and now we're starting to break out. So when we look at this, let's just go to here. You can see how on that sort of longer term picture there, let's go to the weekly chart. You can see this is the weekly chart here. We've just broken out to the upside. And then if I go down to my shorter term time frame charts now, this is back to the daily charts. If I go back to, say, the 6 month view, or even just the 1 year view from there, you can see what's happening here. We're just holding that level from there, as you can see, and we're just holding this level here. So, and this is where guys like, the one thing I'm always looking for is two things here. Look at this here, is again, the trend, which is the lows. And this is where like a lot of traders, one of the most important things too is if we are coming down like this level here, if the market's been doing this all time, then this is probably just going to be a higher low. It's not a change in trend, okay? So just because we get a little bit of a drop, see, drop, 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 what does that mean? Higher low, higher low, higher low, okay? And typically what ends up happening, if you want to keep it really simple, is this, is that if the market is trending, if the moving average is trending strong like that, if any market does come back down to the 52, this is a 52, if the market does come back down to the 52, but the 52 is trending strong and the market's come down through here, the 52 is like a momentum indicator and it's probably likely to push it back up. As we saw with the Dow Jones, and the same thing here, look at the same thing through here, up and boom. All right, so I've always used the 52 moving average. It's the same thing as a 50 moving average. It's just one of my earliest mentors who, this is back now, I've been trading the markets for 20 years myself, and when I first started trading, I learned from a guy called Simon, and Simon was always using the 52 moving average on his charts, and so I've just stuck with the 52 myself. It's been one of the, and as you can see here, right, 52 tends to be really, really good, especially in trending environments. When we start to get trending analysis, real good trending, then we see that from there. So what's going on right now with the good old Russell? So the good old Russell is definitely just holding through here. If I bring on the last 6 months, let's bring in the last even 3 months. So the last 3 months, you can see what's going on here. We're definitely having this whole resistance point up through here. And if you have a look at this here, really for the last couple of months, we really haven't been doing much, have we? You can see we're just holding through here. Now let me bring on, I want to bring on just a blank candles, a blank bar chart here. We know what's going on with the moving average, and let's zoom right in now. So let's go to this 3 month here. So I'm going to bring up the bar chart here. Actually, you know what? Yeah, let's just go this one here. So as you can see, we've just been sort of holding this level from here. We have a strong moving average. So we really haven't been doing much here. This is called what's called energy building phases, because we have this we have these different phases, right? The market goes up, up, and then we go through these sideways phases. So we've definitely been holding here through September and October. Really haven't been doing much there. But what we're starting to see now is we're slowly starting, as I speak right now, we're slowly starting to see the buyers coming back in, right? There's a pressing of the buyers now right here. And what I mean by that is this. If I bring on the last 3 months worth of data, look what's happening here. We had this low point through here, right? See how, so the market psychology is this. The market came down and held this level here. Then we came up, and then as we come back down through here, see how the buyers then actually came into here. You see that through there? So this is the psychology of the buyers, right? So I'm looking at where did buyers come back in, because the chart tells us a story. Last time was what? Last time was there. So buyers came back in, it rallied back up, and buyers came back in here. What does that mean? Well, the buyers are not showing their strength yet, right? Because they're still holding here, but they're not really showing strength. But what's happening now? We had this low, could be a double bottom, but this is short-term analysis, right? So buyers here. But look what happened here, right? In an upward trend, we have higher lows, right? And this is where really honing down on the market so what's happening here is really important, because you can see the buyers starting to slowly come back in. Now look what's happening here. We're not there, we're not 100% there yet, but if this holds and we start to get a rally out of this level, notice how the buyers are coming back in, right? We had this move up and then this overall move down, but the buyers came back in here, but last time they came back in here. Then we had another move up and now we come back down to here, and now we could be getting, see how we're now making these higher lows on the upside from there? So if that happens, we could be getting ready for a breakout, and the buyers are starting to slowly show their hands more now than they have. And that is probably, looking at this level here, we're probably looking at what? Really overall, we're looking at maybe 1.5 months of really not doing much, slowly moving up, but really just holding this level here. So what that simply means, looking at the very short-term analysis on this level here, is the buyers are starting to slowly come back in here, and the buyers are starting to become a lot more eager now than they have been, even through this level here, right? They came in, and they actually came in here a little bit here. So they broke here, had a little pullback, support, came back in. It actually came in the exact same time and came in the exact same time. So the buyers are not really coming in here, right? But then look what's been happening now over the last through October. We're starting to get what? On a short-term analysis, we're starting to get, as you can see, we're starting to get this formation from here. See how it's real, that they're starting, the buyers are starting to slowly show their hands. This is what you want to see. So if we do start to get a bit of a breakout from here, from there, then that's where we could start to see King Russell really start to take some place. And then if that does happen, now where is it likely to go to? This is where it gets really cool, right? So if I look at the actual charts here, and let me bring this up to here, what I normally have is what's called a channel projected target. And so what a channel projected target simply means is you measure the high. Whenever you see a channel in place like this here, and you can see that was the low through there. So if I'm using if I actually use a conservative, so that was the high. So if I use that level from there, see what? So this is called a channel projected target, and so therefore I'm bringing this up to here. I'm going to bring this down to here, and what I'm going to do is I'm going to hold it through there, so right through there, and then I'm going to project that up. It's called a channel projected target. We have a channel, and wherever we break out, that's where we're likely to go to. And now I'm going to bring this up to here. So if we do get, then this really not much going on here for really ever since 2020, right? 2020 big move, and then we've done nothing here. So if we do start to see this bit of a breakout, we go back to the actual market itself here, and now we can look at the 6-month view. If we do get a breakout here, then the Russell, which might sound pretty crazy, the Russell might be getting ready for quite a big move to come. We've been in this nice upward trend from here, done nothing from here. We've been holding above the highs. So if we break out, then the target could probably start the target may start to come into place from there. So really deep that's what I'm saying there. Deep analysis on that one from there. Let's go look at the S&P 500. So the S&P 500, let's look at the 1 year worth of data first. And the same type of analysis, right? Look what's happening here. So we have this sort of, we have these, just a really nice upward trend from here, as you can see. Really, really nice. We could have that through there. I'm just looking at some sort of trend lines that we could actually put into play. There's not exact, maybe even through there. So something through there, maybe. Yeah, so you could possibly use that one there. That's a trend line anyway. It doesn't really matter the trend lines. The most important part is the actual highs and lows. But we're seeing this nice high lows, moving averages coming up as well too. We're getting a bit of a shift to the upside. So if we look at the very short term analysis here, let's go to the last 3 months. We can see how now that was the major high point from there. We broke out, had a nice move up, and now we're just holding here. And one thing I've found about these charts, that whenever we do break out, but then we just hold, if I bring on this chart here, what can happen is we get a breakout like we did here. We broke out to the upside and we just hold here. If we hold and the moving averages start to kick up through there and we just hold, we're likely to break out and then go for another move to the upside from there. So looking at the short-term analysis on these markets here, and looking what's going on here, especially on the stock market analysis and the short-term analysis, to me, spells that we're probably likely to see a lot more upside to come from here, especially coming off the back of this guy right here. So now let's go to look at the actual metals and miners from here, and we'll see what's going on here. So on a short-term analysis on the metals and miners, remember I said before about the 52, guys? I'll tell you right now, the 52 is your friend. Why? Look at this here. Remember I said before, when the moving average is trending up like that, every time we get a bit of a drop to it, don't think that's the top. This is just a bit of a pullback before we push it back up again. Push it back up again. Look what happened just recently. Come back down to the 52 on the daily charts and boom, pushed it back up again. Right? This is what's called equal time and price, by the way. What that simply means is that the market is like an energy field, right? The market goes through these energy using, energy building, energy using, energy building, right? So energy using, energy building, energy using, energy building, energy using, and now we're going to go through a bit of a pullback here, which is like the energy building phase. So it's like a bit, the market goes, that's the reason why you'll never see a market just keep doing this and this and this and this and this, right? There eventually comes like this here, right? This is using energy, and then we go through this energy building phase from here. Sometimes it's like this, and sometimes it's like that as well too. So as you can see, 52 moving average, especially when we're getting these nice, good trending environments, 52 is your friend. It's one of the best moving averages I can recommend to everyone use. And as you can see, it just works time and time and time again. And as you can see, even though we went sideways through here on silver price, the 52 was coming up, and when that happens, more times than not, the 52 is going to come down to the 52. 52 is going to hold it and then push it back to the upside, and that's what we see from there. And you can see what's happening here right now. So short-term little bounce, but I don't believe, just looking at this level here, I don't believe we're going to make another high up here. I just believe we're probably just going to do something like this going on there when it comes to the silver price from there. And the same thing for the gold market as well too, right? Very big move to the upside. We've had this very sharp move to the downside from here, almost at the 52 as well too. And then we can see, look at this here, right? We have this little support level from here, and then we're likely to start to see a bit of a bounce from there as well too. But I believe this is the end of gold, and I'll get to that in just a minute. But short-term analysis, I see that we're probably likely to get a bit of a bounce here. But just like I said at the start, right? Like if I'm looking at the actual cycle analysis, I believe this bounce here in the metals is likely to be complacency, because I believe the thrill and euphoria, what happened a month ago, is now hit the market. We'll probably get a bit of a bounce, complacency, and then we see the market come back down even more. So a bit of a short-term bounce on the short-term analysis from there as well too. So that's what I'm seeing there. And so let's go on to this next one here. So why gold could have put in a major top for at least 1 year in the market here. Let me show you this here. So one thing I've noticed is that there's a thing called price and time, right? So let me go to here, and there's a thing called price and time in the markets here. So I'll bring up this screenshot here. Oh, by the way, this is my post page here, guys, by the way, right? This is my, yes, you can see this is my post page here that I've gotten here. And if I bring this up to here, you can see there's actually a thing called price and time, this one here. Again, look at this here, sitting Sunday morning. This is the mining sector, but let me go back down to this level here. This chart right here. So I really want to get into, see this chart right here? I think I've also got it on another screenshot here about price and time. So this is the fear. Let me go back down to here. Oh, by the way, make sure you grab this book, guys. johnsfreegift.com. I'm pretty sure that I did do a screenshot of this one here. Below off top. Here we go here, right? So this is the overall major cycle things that I'm seeing right now when it comes to this chart here. So as you can see here, price and time must be balanced. And you can see that we tend to go through these 2-year bull markets. Now what that simply means is when we break the high, I saw someone say, but John, it's been a 3-year bull market. No, when we break the high, that there is roughly 2 years. When we break the high, or when we broke the high, it was roughly 2 years. When we broke the high, it's been roughly 2 years. And this is the gold market for me, right? So that's what someone said, but John, it's been a 3-year bull market. What does that mean now? And by the way, guys, it is just an overall estimate of the market cycle of things. And this is where I believe, by looking at this level here, and looking at history of what gold does, and I know there's a lot of people out there that says I'm wrong about this. Hey, this is not me being wrong or right. I'm just saying what could actually happen if we see some repetitive patterns through the markets. And that is, every time in history we go through a very big vertical market, we do end up going through what's called these time phases, and then time phases. And this is where I'm expecting now we're actually probably getting towards the top in gold for the overall this is where, like, I see the major top in gold. And if I actually bring up the actual chart itself, and this is the gold chart here, if I bring on the big long-term monthly charts, you'll be able to see too, just by simple cycle analysis, and you guys know as well too. Now this is a monthly chart. This is not like anything sort of yeah. So this is a long-term monthly chart, right? And as you do know, like any chart in history, when you've seen something that goes vertically that strong through there, most people that are intelligent around these markets and they've seen history, they know this thing just doesn't keep going up, right? Eventually there comes a bit of a time where we actually get a bit of a snapback. And that's why I'm actually expecting to see next year, this actually being a drop in the markets, probably for about 30%, right? I just don't believe we're likely to see this thing continue up. And what we're seeing right now, as you can see, look at this sort of major monthly candlestick chart. It looks like we've actually put in a major sort of topping pattern from here, as you can see. Bit of a candlestick reversal thingy, sticky thingamajiggy. So a bit of a short-term correction, but the long-term analysis though, when it comes to gold, is if I bring on this chart here, this is the logarithmic chart, okay? And the gold chart is simply, this is just a setup. This, by the way, when we're looking at the big long-term monthly trends now, this here is just high, low, up, the major high, low, up, come back down, high, low, and then away we go, okay? So there's a major buying point coming next year, guys. So this drop that we're seeing here right now is just a nice good cooling off period in the big macro cycle of things. So that's what we're seeing from there when it comes to that from there to there. Let's go look at the actual 100-year market cycle right now and where there's some major buying points coming right now. We talked about gold just there, about that point from there. But the 100-year bull market cycle that I'm seeing is in the Dow Jones, right? And if we look at the Dow Jones, this is the Dow Jones here. And one thing I really want to bring this is the last 100 years, as you can see, and we generally go through these major cycle of things, right? Roughly 10 years, not exactly, it could be 12, could be 15, could be, right, but it's roughly 10 years of nothing, and then a 16-year bull market, roughly, not exact, right? Then a 10 years. John, that wasn't 10 years, that was 12.5. Yes, you know what I'm trying to say here, right? It's a rough guide, not like precise one day, okay? But it's an average guide of 16 years, 16 years, 16 years, right? And I say 5 years to go to 2030. We're 12 years in. So that tells me, and look at this here, and the reason why this is so important from a big long-term macro picture is look at this chart. Every single time we've actually had these scares, these are the arrows here. So if I bring this up to here now, and I show you this level here, this point right here was what? This point right here was when Trump became elected. Oh my goodness, crash. But look what's happening here, right? This one here was the COVID. This one here was the recession fears. This one here was the tariff. What do you notice about this level here? Firstly, actually, you know what? Let's do this here. Let me take all the trend lines off the screen here. And what do you notice? See how this is very, very clear. What's the moving average doing? To the upside. Now, if I go back and look at all the times in history, every time we've been in these big bull phases, when has the major cycle topped out? Look, see this level from here? Look at this here. Strong, 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 strong. And then the major topping point is when we actually then started to flatten out there. Now this is big picture here, guys. It's not like, oh, next day, next week, or not even this month. It's a big, massive cycle of picture that we're like, oh, we're now probably getting ready for another one of these phases here. So what happened here? Very big. Look at this. Look at this here. Up, 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 up. You know what this point right here was? What is this point right here? That was the 1987 crash. Very big vertical move. Had the crash, but then continued up in the bull market. Why? Because this was at the start of a very big bull market. Continued up, continued up, continued up, and then we flattened out. See that through there? That's the time what? That's the time we've spent basically 10 years doing nothing. See that? So now what are we doing here? Up, 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 up. So we're still in this very big bull phase from here. And that's the reason why any major correction we've seen in the past, we're in this phase right now. So what I'm expecting is a continuation of what we're seeing from here. Just a nice good continuation of this chart. And again, this is the 100-year big massive cycle chart from here. And this is where we're probably likely to continue on from here. But as you know, these big drops from there to there, that was a 30% drop. This here, recession fears, that was a 20% drop. What happened just recently, right? A nice, good, almost 20% drop. We do get these 15, 20% drops, sometimes a little bit more. This one here was a little bit more. That was a 30% drop, but then it came back up. So we're probably likely to expect that. Okay, so I'm actually expecting something like that to come in next year, FYI. So I expect to see, this here, and then we get a bit of a cooling off period, and then away we go again from there. And this is just not the Dow Jones, by the way. This is the NASDAQ chart. Look at the NASDAQ chart. A big, beautiful upward trend. And that's where like any drop through here is probably going to be bought into. So major buying points coming, guys. And same with the S&P 500. Look at this here. S&P 500, same thing, right? Big, beautiful upward trend from here. And every time we had these pullbacks, and actually you can see from there to there, right? Sideways, big bull market. And again, what was this point right here? That there was the 1987 crash. But why after the 1987 crash we continued? Because we're really at the early stages of a very big long-term bull market. But even when we get the crash, one of the things, this is looking at the monthly charts, right? So it gives you a 10,000 foot view. So you can like, oh, yeah, we're getting a crash right now, but it's probably going to continue up because we're still in the early pages of that cycle for me. And that's the reason why every time we've gotten these crashes from here, the market has been bought back up. We can insert reasons why, but when we look at this chart, we just know, oh, that's what's going on from there as well too. And so let's go to this point here. One market set the breakout that's likely to set a 1 to 2 year bull market that no one sees. That is, ladies and gentlemen, boys and girls, that is the energy market. So the energy market to me, by looking at this level from here, is, let's go looking at the XLE market, this one right here. So the XLE market, to me, I see this thing set the breakout. Now, when I say set the breakout, everything takes time, right? Like we are looking at a monthly chart. So over the next 6 months or so, next 6 to 12 months, we're probably likely to see a breakout. Those who are very impatient are going to say, John, 6 months? I have to wait 6 months for the breakout? And those are the people that are actually probably losing a lot of money, right? Because how you make a lot of money is you wait for the breakout here, you get in and you ride a big bull market. And then you have a really big profit in one trade, not 100 trades of all these smaller profits. You see what I'm saying here? Like it's a different way of thinking, and this is where day trading for me is the worst form of trading out there. If you actually want to generate a big profit, for you to generate a big profit, guess what? You need to get into the market and ride a big trend, right? That doesn't happen in one day. That happens over the course of a couple of months. In this case, probably likely to be a couple of years. This is the exact same pattern here. Went up and then we went sideways for 3 years, right? And then now we're breaking out. In fact, I'll show you this screenshot here. Let me show you some screenshots here. So everything's based on patterns, guys, pattern analysis and so on and so forth. So if I bring this up to here, I've got a lot of screenshots here, and I'll bring this up to here for you guys. So logarithmic chart, okay? This is the logarithmic chart here. So let me actually bring on the current chart. So this is the logarithmic chart. The top chart up here see how it's all the same pattern. It's not the fundamental analysis, but the same pattern. This top chart up here is what? It's gold, but logarithmic 52 moving average. Up for 2 years, sideways for 3 years, broke out, 2 year bull market. This here is AXP, the stock. Up for 2 years, sideways for 2 years, moving average coming up, moving average coming up. We broke out, we went for a good 2 year bull market. This here is Goldman Sachs, but it's the pattern, right? Up for 2 years, sideways for 3 years, moving average coming up. We broke out, we went for a very big move. So see how it's the pattern, right? The pattern gives you an overall projection of where things are likely to go. This is how you make a really big profit, right? So the bottom one down the bottom here is XLE, and that's what I'm looking at there. Same type of thing, right? This one here, XOM. This is the XOM stock. XOM from there. XOM there. So as you can see there, and this one here is the CVX stock as well too. The reason why I've got these down the bottom here is, guess what? Because they're the exact same patterns here. And generally speaking, especially when you got these big beautiful breakouts here on these particular stocks, XOM and CVX, if we get a big breakout up here, we're likely to be starting a multi-year bull market. Break here, a multi-year bull market. On a bare minimum, I would say at least 6 to 12 months of a very nice bull market. And you saw what happened with gold, right? Gold through here, now gold's having a big breakout. So see how it's all the same pattern here? So there's a bit of a gift for you guys, and this is one that I'm watching for right now, because as soon as we start to move up and we start to get a really nice breakout, that could be the start of a really, really big profit from there. Now, again, I don't know when that's going to happen, but that's what I'm looking at there from that point, from there to there. So I hope that helps you out from there. Oh, if I go back down to my very last chart here, this is the last chart here. And you can see here, it's the same type of thing here, right? This is just the monthly charts here now. I think they're just standard monthly charts. But as you can see, same thing here. Gold, GLD monthly, up, sideways, and we had a big move. And see how it's all the same pattern, right? Up, sideways for 3 years. So if we break out, this is the reason why the chart is telling us that once we do get a breakout above 100, then we could be just like gold's been doing the last couple of years, right? A very big, strong bull market to the upside from there. So, and last but least, guys, in today's update for you, the best buy pick that I'm actually already in right now is indeed based off what I said what I said here. So over the next stock market short-term analysis, meaning the next couple of months, I see some really big moves coming the upside. Gold, silver, you know where I'm at right now with that level there. And I also talked about the bond market being down the bottom here. So if I'm looking to ride that next bull wave, then getting into the bond market, and especially for me, it's all about the TMF. It's all about the TMF. It's about this market here, TMF. I see, now this is overall market for the next 12 months, right, guys? As things start to happen, it's not what's happening right now. Like, oh my goodness, it's up and down. No, stop, right? If I bring on this chart here, this is a daily chart, this is the monthly chart here, and I bring on some trend lines. This is what's going on here on the big long-term cycle things. So as we continue into, and let me bring on a trend line from here. All right, let's bring on a line here. And that's roughly around, what is that there? Is that 2027? Yeah. So this is roughly around 2027. So what I see coming here is I see a nice rise into 2027, and then you probably don't want to own it after that there. So that's the best buy, guys, that I see happening from there. And I hope this sort of helps you out there. So traders, make sure that I've just designed a new book based around the mindset, based around Jesse Livermore and some of the really amazing experts on this field. You can see the first thing in the description there. But also, I'm also opening up some spots for my 1 year, what's called my 1% Club program, where you're actually with me every day for at least an hour, where I'm going to coach you and guide you. You're going to be joining a small group of around 15 people. So if you're looking to really take 2026 to next level there, guys, then just book a call with me, and I'll be happy to have a good chat with you. That's that third link in the description there. Or if you go to getjohnshelp.com, and then that should be there to be able to help you as well too. Speak to you soon, guys.